Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's 11th of October 2023 and here are the questions we'll be answering today. How will Israel-Palestine war affect India? And what is Hamas? What were the key outcomes of the recent GST Council meet? How will Indian IT companies fare in the second quarter? After Europe, another geopolitical flashpoint has opened up in West Asia. Israel's fighter jets are pounding targets in the Gaza Strip and its tanks are on the border. If it escalates, this fresh conflict may undermine stability in the Gulf, from where the world sources over 30% of its crude oil. India too is keeping a close eye on this developing situation. In our first report, Abhijit Kumar explores how this war may affect India.
Key benchmark indices have bounced back. Crude oil prices too have come down after surging by over 2% on Monday. Experts called it a short-term knee-jerk reaction to the eruption of clashes between Israeli forces and a band of Hamas militants. But they also struck a note of caution. According to a Bank of Baroda note, if the war persists for long beyond a fortnight, the oil dynamics will change. It said the $90 a barrel number can be used as the benchmark beyond which there is trouble for the world economy. The price of Brent crude had collapsed by around $12 per barrel from $96.6 a barrel on September 27 to $84.6 on October 6, a day before the Hamas attack. And if Brent had continued to remain low in October, it looked like India would have saved $50 million every day and around $1.5 billion a month. It imports 4.2 million barrels a day. The Monetary Policy Committee of the Reserve Bank of India recently retained the projection of retail price inflation at 5.4% for the current financial year. The projection is based on the assumption of $85 a barrel. If the global prices of the Indian oil basket averaged more than this, inflation may rise beyond RBI expectations. So will the war impact India's energy security?
Today, a positive thing is that, oil supplies have now got very diversified. There are supplies in Africa now. There are supplies in Latin America, also in Southeast Asia. So immediately, I think the spike in oil prices is not because of any supply disruptions, but the expectation of supply depression. But much depends upon how long this conflict is going to continue. Is it going to escalate beyond the borders of Israel and Gaza?
Beyond energy concerns, the Israel-Palestine conflict may also hit India's exports to the Middle East, including countries like Saudi Arabia, UAE and Israel. The bilateral trade between India and Israel grew to $8.09 billion, excluding defense procurements in the first 9 months of FY23, up from $7.86 billion in FY 2022. Gems and jewelries are key items of trade. The total trade of gems and jewelry between India and Israel was over $2 billion in 2022 and 23. Industry insiders believe that the war may adversely affect this trade.
On a very crucial item of gems and jewelry, which is the principal trading item for us with Israel in particular, there would be some uncertainty in this particular sector, and this would affect many of our workers in the domestic sector as well. But at the same time, I think there is a flip side to such unstable conditions. We are also a major partner in the food security of the region. On that front, there could actually be a positive upturn in terms of Indian exports to the region because of the tendency in such situations to actually accumulate more for the unforeseeable contingency.
The war has also pressed the pause button on the ambitious India-Middle East-Europe Economic Corridor. Announced on the sidelines of the recently concluded G20 summit in New Delhi, the trade route was being touted as an alternative to China's Belt and Road Initiative. Israel and Saudi Arabia constituted the core of the initiative. But with Israel's attack on Gaza and the Arab world's general sentiment leaning towards the Palestine cause might stall the project.
Obviously, it will raise serious doubts about the viability of that project. Now, this particular corridor assumes, in a sense, that the current trend towards normalization of relations between Israel and the Middle Eastern countries, enabling long-term investment. These are not short-term trade relations. So if, as a result of what is happening today, the relationship between Israel and the Gulf states and the Arab states starts deteriorating, several propositions which have been based on a expectation of that normalization will obviously become a bit of a question mark.
The Israel-Palestine conflict's impact on the Indian economy cannot be underestimated. Experts believe a lot depends on the duration and escalation of the war. But as energy prices rise and export routes become uncertain, India faces the challenge of maintaining its economic growth trajectory.
But ever wondered what is Hamas? Why and how was it formed? Ayush Mishra tells everything you wanted to know about this group, which is all over the news.
On 7th October, as Israelis were winding up the 7-day Jewish festival of Sukkot, celebratory music suddenly gave way to somber war silence. Thousands of rockets fired from Gaza Strip marked the beginning of one of the bloodiest battles that the region has seen. It caught Israelis by surprise. Their security forces too were no less shocked. As we talk, the death toll from ongoing war has passed 2,000. Israeli PM Benjamin Netanyahu has compared Hamas with ISIS and pledged to put an end to this armed group. Its forces are back in the Gaza Strip about 18 years after evacuating the coastal enclave due to international pressure. Israel's withdrawal from the Gaza Strip in 2005, currently home to over 2.3 million people, was then seen as a step towards peace. Israel had withdrawn over 9,000 Jewish settlers and its forces from Gaza, and the power was handed over to Palestinian Authority. But next year, in 2006, Hamas won legislative elections and came to power. No election has taken place since then, and moderate Fatah politicians have been chased from the region. Led by Mahmoud Abbas, they now control parts of the West Bank. Hamas was born in the late 1980s during the first Palestinian Intifada or uprising. It was founded by Sheikh Ahmed Yassin and his aide Abdul Aziz al-Rantisi. Hamas stands for the Haraka al-Muqawama al-Islamiyya, meaning Islamic Resistance Movement. It is designated a terrorist group by Israel, the US, the European Union, and the UK. Some call it Palestinian Muslim Brotherhood. There was growing resentment against Palestine Liberation Organization or PLO, which was till then the flag bearer of Palestinian movement. Its recognition of Israel as a country was one of the reasons, and the other was dropping the armed struggle as a strategy and opting negotiations as a way forward. Hamas had opposed the Oslo Peace Accords signed in the early 1990s between Israel and then PLO chief Yasser Arafat, and the group had then launched a series of suicide attacks against Israelis. It is believed that due to these suicide bombings, Israel withdrew from the peace process. And during all this, another staunch opponent of the Oslo Accords, Benjamin Netanyahu, rose to power in 1996. Popular as Bibi, Netanyahu is 73 now and leading the country into another assault on Hamas.
Back home, India's Goods and Services Tax Council held its 52nd meeting recently. In today's special segment, Kasturi Akhil tells us about the key outcomes and how it may affect you. Let's take a look.
The Goods and Services Tax Council cleared the air on a range of issues at its 52nd meeting held on 7th October. What has been hailed as a welcome move by the liquor industry, the Council decided against levying tax on extra neutral alcohol or ENA, specifically intended for consumption. Extra neutral alcohol is a raw material used in producing alcoholic beverages. The Council conceded the right to impose tax on ENA to the states, while tax on neutral alcohol intended for industry use will continue to attract an 18% GST. Additionally, the GST rate on molasses, which is a key ingredient in making liquors, was slashed to 5% from 28% earlier. These steps altogether brought much awaited tax relief to industry stakeholders, as the issue had been hanging fire for over 6 years since GST was enforced. Besides benefiting sugarcane farmers, the move will limit the possibility of a rise in liquor prices.
When you look at the discussion that happened in respect of ENA also, this spirit of cooperative federalism was very, very visible, because the central government was empowered by a decision of the Allahabad High Court. And if they had wanted, they could have put their foot down and they could have taxed the product. But in the camaraderie that prevailed over there, they were able to give the power to tax ENA for the purpose of alcoholic beverages to the states. And now the states will decide what they need to do. Each state can impose its respective level of tax. The tax rates among the states for ENA for alcoholic beverages may be uniform, may not be uniform. So that, to my mind, was a very key outcome, where for the first time they moved, the center and states moved in tandem with each other.
Further, the Council recommended zero tax for millet-based food preparation that contains at least 70% millets by weight when sold in loose form, while a 5% levy will apply if sold in pre-packaged and labelled forms. Experts say this could provide a fillip to PM Modi's push for millet consumption in light of 2023 being observed as a year of millets globally. The Council has also decided to impose 18% GST on corporate guarantees provided to related parties, on 1% of the amount guaranteed. Prateek Jain of PwC elaborates.
So there was an issue that when, let's say, a holding company gives a corporate guarantee on behalf of a subsidiary for which they don't charge any money, whether that was subject to GST or not, because it's a related party transaction, and even without consideration, it could be subjected to GST. They have clarified that in those situations, 1% of the guarantee amount would be taken as a consideration on which 18% GST will apply. Again, this will have a significant impact because corporate guarantees are issued in sectors such as power, construction, and so on, where there is no output GST liability very often. That means that whatever GST you pay, it could become a cost. So one hopes that this will be a prospective amendment and will not be taken as a retrospective.
Several states raised concerns about the allocation of revenue collected from the compensation cess after March 2026, which marks the deadline for repaying the loans taken by the centre to compensate states. The compensation cess was introduced to bridge the revenue shortfall that states experienced after the GST rollout. Finance Minister Nirmala Sitharaman later clarified that the GST Council has agreed to hold a discussion on the issue. Few states like Goa and Delhi raised concerns about retrospective taxation on e-gaming. The concerns resurfaced as tax notices to the tune of about 1 trillion rupees were issued to several gaming companies ahead of the new 28% levy from 1st October. The Council clarified that betting-based online gaming firms are already liable to pay 28% GST with no retrospective taxes imposed. While the gaming industry may not be happy with the Council's decision, the same wasn't the case with all taxpayers. The Council offered a breather to taxpayers filing appeals against demand orders issued by tax officers till March this year. It introduced an amnesty scheme by extending the time for filing the appeal till 31st January 2024.
He's making plans for an early retirement. Business Standard.
Key benchmark indices, meanwhile, bounced back on Tuesday, suggesting that the likely impact of the Israel-Palestine war has been priced in. Moving on, stocks of Indian IT companies are firmly higher compared to their lows last year amid easing global inflation and a pause in the US rate hike cycle. But as markets begin to bet on higher for longer rates again, will Q2 results of IT firms add to the worries? Harshita Singh finds out in this next report.
The second quarter earnings season will begin with TCS results on Wednesday, followed by Infosys and HCL Tech on Thursday. The street, however, does not have high expectations from Indian IT majors following Dublin-based Accenture's soft earnings in its latest fourth quarter and a higher than expected moderation in the revenue guidance. Citing client caution, which is weighing on tech spending, Accenture laid out a 2 to 5% growth target for FY24. In comparison, it saw an 8% growth for FY23. As a global backdrop of high interest rates remained unchanged in Q2, IT earnings will thus largely be muted in line with the previous quarters.
So for IT, September quarter is expected to be similar to what had happened in June quarter, and that is due to the uncertainty around macro environment. On financial front, we are expecting revenue growth to be in the range of -1 to 3% for large caps, but for mid caps, we are expecting a tad better revenue growth in the range of 2 to 4% quarter on quarter. For margins, we are just expecting 20 to 40 basis points improvement, as there are mixed sentiments wherein on one side, cost optimization measures are taken by the company, but on the other side, a salary hike may impact margins.
Analysts at Kotak Institutional Equities see yearly constant currency revenue change in the range of negative 2.9% to plus 3.2% for the Tier 1 firms, as a broad-based weakness will be amplified in banking, retail, and telecom segments. Those at Nomura also remain watchful of the BFSI and communication, media and telecom or CMT verticals. IT budgets will likely be prioritized toward automation and cost efficiencies in the near term, which will hurt discretionary spending. Some positives, such as falling attrition and salary hikes returning to usual levels, will continue, but we remain cautious on the sector given limited visibility on a turnaround in discretionary demand. The global brokerage said. At the bourses, the Nifty IT index is up 13% this year as compared to an 8% gain in the benchmark Nifty. The rebound came as the street priced in the beginning of rate hike pauses this year. But analysts do not expect companies to guide for a sharp pickup in growth for the rest of the current fiscal. HDFC Securities see a low single-digit 4% revenue growth for the sector in FY24, which it expects to recover to 9% in FY25. Thus, analysts suggest a selective stance on the sector. Besides, investors will closely watch out for discretionary spending trends, deal booking pipeline, and commentary on senior leadership exits and replacements in the IT sector from their results.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But experts believe that select mid-tier IT companies are likely to maintain their good run in comparison to the Tier 1 players. Well, that's all for today. For more news, views and insights, please log into business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.